All right, let's dive in. The stock market right now, it's sending some seriously mixed signals. I mean, one minute everything feels bullish, the next it feels like everyone's hitting the brakes. So what's really going on under the hood? Well, today we're going to try and decode these conflicting messages by digging into the analyst sentiment from 50 of the most actively traded stocks in the US.
Here's how we're going to break it all down. First, we'll start big picture, looking at the market's overall mood. Then, we'll zoom right in on the superstar stocks and some really interesting hidden opportunities. After that, we'll cover the red flags to watch out for, and then we'll pull all the way back out to build a strategic playbook you can actually use.
So, first up, let's just get a feel for the room. What's the overall sentiment in the market? What is the big picture really telling us?
Okay, so if we look at things on an hourly basis, it is an absolute tug of war. You've got about 18 buy signals on one side, but they're facing off against 15 strong sell ratings on the other. And even though the numbers are close, you can see the strong sell camp has a bit more, well, conviction. This is that minute-by-minute short-term noise of the market.
But watch what happens when we just zoom out a little bit to the daily view. Boom. It is a complete sentiment takeover by the bulls. The strong buys more than double to 22, and the total buy recommendations just totally dominate the chart. This tells us that once all that intraday dust settles, all the noise within a single trading day, there's a really powerful bullish momentum taking hold.
Now this is where things get really interesting, and where the long-term confusion starts to creep in. On a weekly chart, that bullishness is holding strong. Look, only 4 strong sells. But then you look at the monthly view, and that number triples to 12. So what does that mean? It suggests that while the near-term stuff, like maybe quarterly earnings, looks pretty good, analysts are getting a little more cautious about the longer-term picture, probably because of bigger economic concerns. The biggest takeaway here? Your time frame changes absolutely everything.
Okay, so with all this back and forth, this noise, are there any stocks that analysts can actually agree on, no matter what time frame you're looking at? Let's go find the market's true superstars.
And here we go, a perfect example. Eli Lilly. Just look at this, a clean sweep. Strong buy on the hourly, the daily, the weekly, and the monthly charts. This, right here, is what real analyst conviction looks like. It suggests there are some seriously strong fundamentals at play, likely driven by their innovations in pharmaceuticals.
And Eli Lilly isn't the only one on this conviction list. We're seeing that exact same strong buy rating across the board for the e-commerce and tech giant Mercado Libre, for Alphabet, the financial powerhouse JP Morgan, and even the data storage company Seagate. These are the names that are just showing sustained optimism from every angle.
Now let's get to what I think is the most fascinating part of this whole analysis. The stocks where the sentiment doesn't agree, where it clashes dramatically. Because this is often where short-term weakness can hide some amazing long-term opportunity. Just take a look at the semiconductor space. With Intel and AMD, on an hourly basis, the data is screaming strong sell. But then you pull back to a daily or weekly view and it completely flips to strong buy. I mean, that kind of whiplash, that's a huge signal. And by the way, this same pattern is also showing up for Tesla.
And this quote just nails it. This pattern suggests these stocks may be experiencing significant short-term volatility, but maintain strong underlying growth prospects. So what that really means is, for investors who can stomach that short-term choppiness, there might be a really powerful underlying trend just waiting to be ridden. Which of course brings us to the big question every single investor has to ask themselves when they see a setup like this. Is this a warning sign telling you to stay away, or is this a window of opportunity, a chance to get in?
But of course, not all conflict points to opportunity. So let's flip the coin and look at the stocks where the negative sentiment isn't conflicting at all. It's consistent and it's persistent. These are the red flags.
Yeah, the term you really want to watch out for is a persistent strong sell. This isn't just a stock having a bad hour or a bad day. This is when analysts have these really deep-seated concerns that stretch from the very short term all the way out to the long-term outlook.
And here are the cautionary tales in our dataset. Pfizer really stands out with a strong sell across every single time frame, which reflects some of its ongoing challenges. We're also seeing similar persistent negative ratings for United Health, Pfizer, and surprisingly, even Chipotle, which tells us that fundamental concerns are weighing really heavily on these names right now.
Okay, we've seen the good, the bad, and the really volatile. So how do we turn all of this analysis into an actual, actionable strategy? Let's build your playbook. So rule number 1 in your playbook, and you could argue it's the most important one, is to align your strategy to your time frame. That hourly data that is absolutely critical for a day trader,
It's just noise to a long-term investor who's looking at the monthly charts. You have to decide up front which signal you're even listening to.
Number 2, don't automatically run away from conflicting signals. In fact,
You should look for conflict to find opportunity. Remember that huge divergence we saw in stocks like Intel and AMD? That shift from intense hourly selling to daily buying? That can be a super powerful signal for potential swing trades, where you're trying to capture a price move over a few days or weeks. It's really where volatility meets value.
And finally, the third part of your playbook is really all about finding a balance.
Focus on consistent strength for conviction, but you have to be selective. A stock like Eli Lilly, with that clean sweep, gives you a reason to believe in a long-term position. But then a stock like Pfizer, with its persistent sell ratings, reminds you that even in a strong market, you can't just buy everything. You gotta pick your spots.
And that leaves us with the final thought. See, this data doesn't give you one simple answer because, frankly, there isn't one. What it does give you is a map of the market's complex psychology. So in a market that's sending so many mixed signals, the real question is, where will you place your bets?